Hi, everyone. I'm Francine Lacqua, and I could not be more delighted to be joined by Alison Rose, the Chief Executive of NatWest Group, to look at the year ahead. Alison, I have a lot of questions. First of all, thank you so much for joining us. I have a lot of questions on some of the loans, on some of the businesses that could go under. But maybe the first question, as most people I think are watching from home, when do we go back to the office? When, how comfortable are you as a chief executive to tell your workforce actually in 5, 6, 10 months, most of you will be back in the office?
Yeah, well, it's great to be here. I think the working from home is a really difficult challenge. At the moment, our priority is managing the balance between keeping our colleagues, our staff safe and well and supporting them. So we have 50,000 people working from home. And at the moment, in line with guidance, we're telling them nobody will be coming back to work until at least April. But as well, we have 10,000 of our colleagues who've never left the high street, who are working in branches, providing critical services to customers all the time. Now, I think what we found during this crisis is the ways of working have evolved really dramatically. It's busted a few myths in terms of that you need to be in the office, that is a way of working. And it's accelerated a trend of flexible and agile working. So I think what you'll see is an evolution of people making the most of these more agile working practices. And we can see it in how customers are behaving, how colleagues are behaving. And just to give you a sense, if I think of January last year, we would maybe be doing 100 video calls a week, video conferencing calls a week with our customers. We now do 9,000 a week, and customers love it. So it's a very different way. And it's the same with our colleagues. They're working differently. So I think it will evolve. I think workplace, office place will become a space of collaboration, connectivity, thinking about culture. And then what we'll get is a different experience as we evolve the working model. So you won't see it going back to what it was before, but it won't be staying like this either.
What are your customers most worried about? So we have these, sometimes horrific numbers. 900,000 small businesses could go bust in the next couple of months. How are you supporting businesses and customers that need it most right now? And when's the crunch point? Is it 2, 3 months, or could it actually take longer?
Yeah, it's an incredibly difficult time for customers. Our customers are worried about lots of things. Obviously you've got the incredibly, difficult and shocking statistics of how many people who've lost their lives because of COVID. So that's affecting families and businesses right the way around the UK. For small businesses, there's been a huge amount of support put in place through the government support, the support we've provided. We've advanced 14 billion of loans through the government lending schemes, as well as the existing lending we do. But you've had businesses go into a hard stop. And for very small businesses and medium-sized businesses, a lot of them are facing real challenges and questions of whether they will ever reopen. They've taken on a lot more debt. How are they going to service that debt? Is there growth for them, and how quickly the market will come back? So more than anything, it's a huge time of uncertainty. So what we're focusing on is putting support in place to help people through this period, and also planning for how we help get the economy moving and businesses out. So whether that is our entrepreneurs, who we're putting, all of our entrepreneur accelerators that we have around the country are all online, digital support, webinars, help of how you manage your cash flow. We've established an SME task force working with government and businesses to listen to our customers about the help they'll need to recover. So huge amounts. But the reality is, this is an economic crisis triggered by a health crisis, which is still evolving. And so the speed with which we can get businesses back, how long they can survive, and what the economy and recovery will look like are all still questions right now. I don't think yet we've hit the tough times for businesses. A lot of businesses won't survive. That's the reality. But good businesses need to be helped to survive. So I think at the moment, all of that support is helping buffer the impact. But until we get the economy moving, you're not really going to see what the underlying issues are. So the most important thing now is listening to businesses, getting as much practical help and advice and support in, and then preparing them for what the future may be and being agile enough to help.
And Alison, do you worry that you'll never actually recover some of the loans to small businesses? How much of a hit will that be? I guess the longer the lockdown or the stop and start kind of lockdowns, are we going to see real scarring in the economy, which could lead either to unviable companies or even worse, zombie companies?
Yeah, I mean, it's very difficult because there's, the support that's gone in place. If businesses have taken on a lot of debt, that's a huge amount of borrowing that companies have taken. Now, they've been structured in a way that means they have a long period to repay at very cheap rates. And so their ability to service that debt and whether that will, and I think constrain future growth is really the challenge that we're all wrestling with. And how do you allow a viable business the time to grow? Now, I think that the big dynamic here is when does the economy get moving and how quickly does it recover? There's a lot of talk around, once we're out of COVID, whatever that means, you're going to get a roaring 20s type of recovery and a boom period in the economy. Now, if you look at Australia, you've definitely seen that consumer spending came back really quickly. You've seen that in Asia, but really until we get visibility of that, the level of underlying scarring of the economy is very difficult. What you want is good, viable companies being supported and able to survive. But equally, sustaining huge numbers of zombie companies is not going to be the right thing for the economic viability. So it's a very difficult balance to manage because we're dealing with a hard stop to the economic growth rather than a natural evolution of business growth.
I remember, when this started, we were talking about basically having to suspend the economy, and then it morphed into, the health crisis versus the economy. I have a question from the audience, which is, if you look at the year ahead, do you think we're again having to choose between our health, and the economy?
Well, I think we are facing a situation. I mean, the health crisis is pretty shocking. I mean, the number of deaths in the UK is a really sobering number, and I know that's happening everywhere. And I think we're also seeing disruption to the younger generation in terms of job prospects and their education. It's a balance, and I know it's a really difficult one. We've got to do enough to protect as much of the population as we possibly can from the health crisis, but we've got to get the economy moving again. Now, the one thing I would say that I've seen and talking to customers up and down the country where we support businesses is the entrepreneurial nature of business and the way in which businesses have been able to pivot their operating model, use new innovation, enhance their productivity and their business has been quite astounding. And the resilience of business has been very, very strong, and we shouldn't underestimate that. But you are, I think, seeing a bifurcation between businesses that can reinvent and move and those who are going to really struggle. But it is a balance. We cannot put the economy into a hard stop because the longer term detrimental impact of that on people's lives, on jobs, on income also have consequences as well.
We had news today that actually JP Morgan is looking at, coming into the foray into the UK with a kind of retail bank. What does that mean for NatWest? Do you think actually if a big Wall Street bank wants to get in, it means there's a lot of potential, or is that just more competition?
Well, I think both. I think both. So more competition. I think it's, this has always been a very competitive market. And so I think offering consumers lots of choices is no bad thing. So I think their launch of their digital bank that they're talking about, that's going to bring more competition into the market. From what I see from our perspective, what does that mean? Well, 9.1 million of my customers are, digitally active and engage with us on our mobile app. So we have a very digitally agile business. So it'll just be another form of competition, which we're used to dealing with. So, but it gives the consumer more choice and it's more opportunity, and it shows an acceleration of the trend into digital, which is what we've seen continuing over the last few years.
Of course, UK banks also have to deal with Brexit. We're 3 weeks into it. Have you had any impact on your business because of Brexit?
No, not as yet. I mean, obviously, it's early days. Clearly, from a banking perspective, we were very well prepared and had to prepare for a hard Brexit. So we had our operations and trading subsidiaries established to be able to deal with it. I think the issue is really managing the supply chain for customers, and making sure that they can respond to that. Now, one of the things that I was worried about a year ago, was looking at, maybe sort of 18 months ago, was looking at what the Brexit would do to disruption of supply chain, particularly for small and medium-sized businesses. In some ways, those supply chains have been hugely disrupted by COVID, and businesses have had to reinvent and be more agile. But certainly, as we evolve to the new trading standards, businesses are having to adjust. But so far, very minimal disruption, and businesses are, I would say, preoccupied with COVID right now, and they'll deal with the new as the economy ramps up.
Where do you see the legacy of this pandemic being for the UK and UK banks? We touched a little bit on some of the loans on small and medium-sized enterprises. I know you've done also a lot of work on equality, gender equality, racial equality. Are we underestimating the impact that this has on a diverse basis? That actually it's people that would need more support that could be held back because of what we're seeing.
Yeah, I mean, I think it's incredibly important. There's a huge amount of trends happening at the moment, and it's really important that we don't, allow parts of the population or businesses to be disconnected. One of the areas of focus that we have at NatWest and really been driving is focus on entrepreneurs, and particularly female entrepreneurs. And at the moment, you're seeing that female entrepreneurs are facing a disproportionate burden than male entrepreneurs. We're seeing from some of our research that over 71% of female entrepreneurs are saying they're finding it more stressful to balance all of the issues caused by the pandemic and running a business compared to only 55% of men. So it's really important that we don't allow sort of the pandemic, the acceleration of digital, the shift to the low carbon economy, leave behind parts of society and disadvantage different groups. So I think it's really important for business leaders to be really focused on, as we build back better, as we transition to a low carbon economy, as we build businesses out of the pandemic, we keep a very firm focus on these areas of equality so that we're not leaving either communities or populations behind that have huge contributions to make. So I think it has to be a very thoughtful, build back better approach to make sure we're funding the economy for really sustainable future growth rather than immediate response.
What does that mean for banks? Do you think banks will actually, build back better?
Yeah, I mean, look, I think what you've seen is an acceleration of, for example, underlying digital trends. We've seen an absolute uptick in the amount of digital engagement, the use of technology, which allows us to leverage, the investment that we've made. We're really focused, as we launched our purpose over a year ago now, to really focus on how do we really support those parts of the economy and our customers to make sure that they're supported. So we focused on financial education and capability to really support people manage their balance sheets, manage their capability, enterprise, entrepreneurs, SMEs, lifeblood of the economy. We're really making sure we're putting our weight behind that, and that's going to be even more important as we come out of COVID. And climate, I think, this is, as everybody has talked about, one of the biggest challenges that we're ever going to face. We put that in our strategy a year ago and said the role of banks is to really help finance the transition. And I think that's really important. The imperative to get to a low carbon economy is absolutely critical. But in doing so, I think banks have a real role to build back fairer and more equal and finance not just the transition, but also the new technology, the new entrepreneurs, and support communities thrive up and down the country.
So far, Alison, it's amazing, actually, given what we've lived through in the last 12 months. If you look at the year ahead, that the financial system, the banking system seems to be in pretty good shape and pretty stable. When are you thinking of, looking something like we saw in 2018, 2019, in terms of giving back? Is it, shareholders, but buybacks and things like that? When do we go back to pre-pandemic kind of relationship with shareholders?
Yeah, well, clearly there was the extraordinary situation as COVID bit, where we had dividends suspended across the globe in some cases, which I think was an important step. we're very committed to making sure that we start returning capital to our shareholders as soon as we possibly can. You're absolutely right. The banks have been very strongly capitalized. We have one of the strongest capital ratios in Europe. That's meant we've been able to support our customers through this period, protect our balance sheet, and position ourselves well for the recovery. And also with the capital levels we have, start redistributing capital to our shareholders as soon as possible. And that's certainly one of the things we're very focused on.
I have a couple of questions from the audience. One is on fintech, the other one is sustainable business, and even one on negative rates. Why don't we start with fintechs? And this person who's writing in, Alison, asks, what is your partnership strategy with fintechs to enhance services and experiences for customers? How will that change?
Yeah, I mean, we're very focused on partnerships with fintechs. I think, the growth of fintechs is a really positive thing. One of the things they do incredibly well is customer service. You can see some of the fintechs being really strong in that place. So I've always adopted approach of partnering with fintechs. I think it's a really good balance to make sure that, we can benefit from their learnings, they can benefit from our customer base, and ensuring that we do that. And we have great examples where we've done that. A good example is our online lending, where we partnered with an Israeli fintech, other areas where we've partnered Rapid Cash, where we partnered with fintechs to help us build sort of a really digital invoice financing business. So I think partnership is a really important aspect of going forward. I think it allows us to benefit from learning from each other and give fintechs access to broader customer bases. And I take those learnings inside. One of the things that we've benefited from over the last 5 years is that partnership with fintech, which means our digital innovation has been able to accelerate. It's why we were able to stand up our government lending schemes, which is fully end-to-end digital, in a matter of days. And that's a great example of us using our own technology, but also benefiting from partnership as well.
In the run-up to COP26, this is another great question from the audience. You mentioned that NatWest are trying to promote sustainable businesses to help to tackle climate change, but how much more do we need to accelerate that from the financial markets point of view to really support some of the efforts also that central banks are trying to put in place?
Yeah, well, we're a big supporter of climate change. It's a core part of my strategy. I announced last year that we were going to halve the impact of the financing on our balance sheets and be net zero, which we are last year, and be net climate positive by 2030. So I think as the sponsor, the financial sponsor of COP26, I think we have a really important role to play in bringing together the necessary collaboration that we need to address climate change. We're putting some really bold plans in place in terms of the commitments that we've already made, the commitment for 20 billion of financing for renewable energy. We're holding 25% of our spaces in our accelerators for green fintechs to allow them to develop, as well as collaborating on things like future mobility to think about how we can get carbon out of the transport sector. So we'll bring all of that to COP26. The most important thing I think there is the collaboration. We need everybody to work together. It's fantastic that the US are now back at the table. Great moves earlier this year by India and China. And I think setting targets, setting clear data so that we have a common standard. And most importantly, our role will be helping to finance the transition so that we can support small businesses and customers move forward. But COP26, I think, is a great opportunity to bring all of that together with all the key parties to set the way forward.
Are UK banks ready for negative rates if they come from the Bank of England?
Sorry, I missed the question. Apologies.
On negative rates. If we were to see negative rates in the UK, which is one of the biggest debates that faces the Bank of England right now, are UK banks ready?
Yeah, I mean, I think there's been a big consultation with the Bank of England on are we ready? It would clearly require investment in our technology and our systems, but to the extent that we would need to respond, we would be able to respond. I think the Bank of England have been very clear that it's one of the tools in their toolkit, and I think there's a big consultation. So we would obviously respond to what was required.
Alison, so we talked about climate change, we talked about negative rates, we talked about inequality, we talked about loans, small and medium-sized enterprises. And maybe as a final question, it's basically, what is the one global trend for NatWest or for you that you see in the next 12 months? It's a trend, what is the trend that basically will be accelerated because of COVID-19?
Yeah, look, I think there are a couple of things, but I think absolutely the acceleration of digital and technology. We know the world we were facing into a year ago. I talked about disruptive trends, changing technology, changing customer behavior. I think that has been accelerated massively as a result of COVID. I don't think that will bounce back. People have really taken huge adoption of these trends. And so making sure that we continue to keep, relationships at the heart of banking, but using the technology and the investment that we have and support the adoption, which has really been driven by customers.